Two people move to Spain, same 80,000 euro salary, same laptop, same cafe in Valencia. One pays about 23,000 a year in taxes, the other about 28,000. That is 5,000 euro difference every single year. Over 6 years, that's 30,000 euros. And here's the crazy part. Neither of them is breaking any laws. They are just on different paths. In this video, I'm going to break down exactly how Spanish taxes work, the Beckham law loophole that saves employee thousands, and the US LLC trap that Americans constantly fall into. I'm Juliana, immigration lawyer. Let's make Spanish taxes actually make sense. First question everyone asks, when does Spain actually start taxing me? You might think it's the day you get your visa or when you land. Nope. Spain doesn't care about that. Spain has two triggers. You only need to pull one. Trigger number one, the day count. If you spend more than 183 days in Spain, January 1st to December 31st, you become a Spanish tax resident. Quick math check. 183 exactly, you're safe. 184, you just cross the line. Trigger number two, your center of economic interests. This means where's your life base. Even if you travel constantly, say 150 days in Spain, 100 in Portugal. If your clients are Spanish, your bank is Spanish, and your business is registered here, Spain can argue you are a resident. Once you trigger either of these, Spain taxes your worldwide income. Your US salary, that German rental property, that random stock dividends, Spain wants to know about it. Now, don't panic. You usually won't pay tax twice thanks to double taxation treaties, but you have to report it. So, does the digital nomad visa change this? Actually, this is where everyone gets confused. There's a massive misconception that says, the moment I get the digital nomad visa, I'm automatically a Spanish tax resident. That's not exactly true. Let's look at the real scenario. You arrive in November 2025. November to December, it's only 60 days. You literally cannot hit the 183-day rule before the end of the year. So, for that first partial year, you're likely a non-resident. You don't feel the big annual tax return. Instead, you pay a flat 24% only on the income earned while physically in Spain. You file this using Modelo 210, but watch out, because when January 1st rolls around, the clock resets. By summer, you will hit 184 days and boom, you're a full tax resident. But wait, before you apply for the DMV, there's a hidden requirement for employees. If you're employed by a foreign company, Spain requires a bilateral social security agreement. If your country doesn't have this agreement with Spain, you might not be eligible for the employee DMV at all. USA, UK, usually fine, but you need to check this. If you do have the agreement, your employer handles Social Security differently and do you not register as Autonomo. Now, standard disclaimer, I'm an immigration lawyer, not a tax advisor. I'm teaching you the system so you don't get played by it. But for your specific cross-border strategy, you need a pro. Speaking of a strategy, let's talk about how to lower your tax bill, because Spain has two different tax systems. And picking the right one is the difference between paying 24% or 47%. To understand this loophole, you have to understand the staircase. Spain uses progressive taxes. People hear 45% tax bracket and they think the government will take half of their money. That's wrong. Think of income like stairs. Stair 1, you pay 19%. Stair 2, you pay 24%. You only pay 45% on the money that sits at the very, very top, about 60,000 euros. So if you earn 50k, your actual average rate is closer to 27%. Why does this matter? Because in Spain, employees and freelancers climb different staircases. Here's the fork in the road. Path A, the employee. They can access a special flat rate system. Path B, the freelancer. They climb in the progressive stairs, saying 80,000 euro income. Employees pays about 23,000. Freelancers pays about 28,000. Why is the employee path cheaper? Because of a footballer named David Beckham. Back in 2003, David Beckham basically told Spain, "I'm not paying 45% tax." So they made a law for him, and now you can use it too. The Beckham law gives you a flat 24% tax rate on income up to 600,000 euros. No progressive stairs. Plus, your foreign investments and foreign rental income generally exempt. Spain doesn't touch them. This lasts for 6 years, but you have to qualify. Here is a checklist. 1. You must be an employee. Freelancers with multiple clients, you're out. Sorry. 2. No Spanish residency in the last 5 years. 3. The time limit. You must apply for this within 6 months of arriving. If you wait 7 months, you lose the status forever. For digital nomads, this usually means your foreign company employs you directly or uses an employee of record. Remember the social security cost? At 80k salary, tax is 19,000. Social security is 4,000. Total is 23,000. But what if you are a freelancer? Is it all bad news? Actually, no. Before we look at the freelancer math, which actually has some hidden benefits, I want to mention one thing. Figuring out if you qualify for Beckham's law or checking those bilateral agreements, that is complex. My team at Your Spanish Visa connects you with tax specialists who do this every day. We handle the visa, they handle the tax strategy. If you want to check your eligibility, click the link in the description for a free strategy consultation. Okay, freelancers, here's how you win. If you are an Autonomo, you are on the progressive staircase. Rates goes up to 47% or more. Sounds painful compared to the flat 24%, right? But freelancers have a secret weapon: deductions. Employees are taxed on their gross salary. Freelancers are taxed on profit. Your co-working space, deductible. Laptop, deductible. Software, deductible. Even your social security payments are tax deductible. So if you earn 80,000 after expenses, the taxman might only see 67,000. However, there is one specific group that is about to walk into a trap: Americans with LLCs. I hear this constantly. My US LLC is tax-free in America, so it's tax-free in Spain, right? No. In the US, the IRS ignores your LLC. Spain does not ignore it. They will view it as a foreign company controlled by a Spanish resident. They can tax the corporate profits or your personal income. Do not just move here and hope for the best. Let's look at the final scoreboard. Same 80,000 euro income. Left side, employee on Beckham's law. Rates, flat 24%. Social security, about 6%. Total bill, roughly 23,000. Pros, low tax, simple. Cons, strict requirement, 6 months deadline. Right side, freelancer. Rates, progressive. Total bill, roughly 28,000 after deductions. Pros, deductions, unlimited income growth. Cons, higher tax bill, more paperwork. The difference, about 5,000 a year. Also, keep in mind, location matters. Madrid is currently the tax heaven, top rate 45%. Barcelona, top rate 50%. Andalusia, they are fighting back with 47%. It's not as scary as it sounds, but you have to pick your path early. Which path are you on? Employee or freelancer?